Amazing trade today on the S&P 500. I want to break down the setup that I took. In fact, the setup was not even when the market was open. It was in the pre-market session, trading futures. I want to break down and go in depth of exactly what I saw, why I saw it, how I executed it, and my overall thought process for this setup. It was a little over $12,000 profit on the E-mini short. I traded 9 contracts, and if you've been watching my videos recently, this is above average on the normal size I have been taking, and I want to explain why I increased my size on this position, and a large part of that had to do with my conviction in the setup, and especially trading the pre-market session. So first off, I'm going to post a link for my Instagram in the description below. If you have not followed me on there, I definitely recommend doing so. On my Instagram yesterday, before the move happened, I posted 17 hours ago of this video about 8 o'clock Eastern time to keep an eye on the ES and SPY 3955 level overnight and in the morning. This can trigger a very big move. So 3955 is going to trigger a big move. This was the day before the move happened. Again, if you're not following me on my Instagram, I'm going to post a link. I recommend following me on there. I post these daily trading recaps along with really good trading tips and tricks on a daily basis. Now, where did this 3955 level came from and why it was so important was if we look back on a higher time frame chart, last week on Thursday, November 10th, we had a very large rally about 150 points before the market even opened, and about 200 points for the full session. We had a very large rally off of news and CPI data with very strong buying volume. Now, the day following the CPI data, on Friday of last week, the market opened, and I think I made a video on this, and this was a setup that we took last Friday where the market came into 3955, and if you were watching the tape, the time and sales, the level 2, and other order flow tools, we saw very strong buying activity as the market was selling off aggressively. Again, I think I did a video on this, into 3955, and we spotted buyers at this range. In fact, on last Friday, 11/11, I said in the intraday commentary tab that I don't think the short side is the best move. There's some buying here at 3955. We may want to revisit 4,000 as long as we could hold 3955. So this was a very important level last Friday, November 11th on 11/11, that every time the market came into this level, we found buyers, we spotted them on the tape, and the market had a hard time getting below this. And every single time during the day when 3955 got tested for a third time, we saw the market rally, and we eventually hit 4,000, which was the plan that day, as long as we could hold above 3955. So now this level moving forward is vital because now we know it's an inflection point in the market that serves an important purpose that buyers are factored in at. So now we have technically a level of support. I consider it a level of buyers that if we break below this level, it usually will cause a further sell-off to the downside. Maybe these buyers are underwater. Maybe they have to sell out of their position. Whatever the case may be, if we can get below 3955, this would have served an important role in my analysis. In fact, every single day this week, starting on November 14th, which was the Monday, there was a setup that if we can break below 3955, I'm going to be looking to play the market short, targeting 3935 and then 3919 demand. That was on Monday. Then on Tuesday in the pre-market plan, again, I post these every single day in my Discord, setups I'm watching and levels I'm looking out for, and potential trading scenarios. On Tuesday, 2 days after we saw this action, number 2 scenario was the bearish one, that the real downside move is going to come once 3955 breaks. This is my downside level. I cannot get bearish until we're below this. Once it's true, I'm going to be looking for shorts, targeting 3920. Now on Wednesday, November 16th, the day after this, scenario number 2 was, as long as we are below 4,024 and make our way towards 3955, again, once this level breaks, I'm going to be watching the market short, targeting demand below. Monday, Tuesday, Wednesday, every single day in the plan, we were watching 3955 to break. And then Wednesday night when the market closed, before I shut my computers down, I said the plan from earlier is still valid for the overnight session and it will be valid for tomorrow. A break below 3955 brings a sell-off into 3919. And at the same time, that's when I posted it on my Instagram for every single one of my followers that watch my story could see this level and have it on watch for the following day. So this isn't hindsight trading, and it was significant in my analysis for the market structure. To add on top of this, we now combine market structure. And what I mean by this is here's that rally on CPI data. The market comes up. This where I'm hovering my cursor over right now is where that 3955 level formed. And then pretty much all week, we balanced in this little tight consolidation range with a breakout above the highs, a failed breakout back inside of the range, and now we're trading inside of this range with that level of 3955 right there of support that once it breaks, we're going to get a breakout of structure, then the market's going to start moving down into our next demand zone, which was right in this area right over here. So a break below support, we can use the next demand zone as a target. This is what it looks like on TOS, and then we got that breakout below it on Thursday. And this is the beautiful thing about trading futures. I'll be honest, I normally do not trade futures overnight. It's just not my style. I don't really do it often. And when I do it, I know it's kind of a high quality setup that I am watching like this one. But the beautiful thing about futures is you can trade them when everybody else is sleeping, or when you cannot trade options when you normally could trade it when the stock market's open. So futures enables us to trade throughout the night when most are sleeping and most are lazy. I have a very strict morning routine. I wake up very, very early on Eastern time. I'm preparing for the day. I'm preparing for the market. So I was up during this setup. I am usually up this early in the pre-market sessions. I get my stuff together, I get my mind, I get my body ready for the day. If I did not have this strict routine and I did not prepare myself mentally and physically, and I was still sleeping, I would have woke up with deep regret seeing the market fulfill my plan when I was sleeping and being very lazy. Now, I'm not saying these moves happen often. They are very rare. They are not frequent. In fact, I would say this is probably the 1 or 2 times that I have traded during the overnight session. But the move happened about 6 o'clock Eastern time when we finally got that break below 3955. So I got in this trade at 5:49 a.m. Eastern. About 2 points before that 3955 level broke. I got in out of speculation that this level was going to break. The market looked just like this, and I'll be honest with you guys, I wasn't in front of my computer screens. I was in the sauna at the gym, and I even posted a picture about it in the Discord. So I'm in the sauna at this time of entry. I didn't have my normal book map. I didn't have my normal charts. This was not so much based off of a tape confirmation. This was just more a conviction that my risk was extremely tight, and I had high conviction of this 3955 level breaking, especially that we were below the previous day's low, formed a low in the overnight session, came back up, consolidated. This little consolidation area right here actually formed supply. I'm going to leave it as a green box because this plays an important role in later in the day. So I saw this little consolidation before a move down, speculating that supply was going to form. At the same time, we were breaking structure and breaking this 3955 level. So I'm in short over here. My stop loss is a little above this previous high. So I'm risking about 10, 12 points on this setup. And my overall ideal target was 3919 demand. So the point I'm trying to make here was I did not have the confirmations that I all look for, especially executing wise on the tape. Looking at the time it sales in level 2, I didn't have that luxury today as I was on my phone putting this order in. But I got in prior to this level breaking, and then immediately after I got in, this thing started working out in my favor. And I just had high conviction in this, continuously put in lower lows, continuously put in lower highs. I rushed back to my office at this point. I said the level's broken. Ideal target for this trade is 3919. However, I need to see how the market reacts to 3933, which is the action from last Thursday. And then I said I'm scaled out here at 3933. I'm still in some of this position. I just lightened the load after a 20-point sell-off as news was coming out before the market opened. And I really I'm not comfortable trading the overnight session like this. So I traded larger size than normal, although I am uncomfortable trading the overnight session. The movement and the volatility is lower, so I'm comfortable taking higher size to brace and to compensate for the lower volatility and larger price swings. When we get these larger price swings and the larger volatility, that's when the higher size will pay. So now 3933 triggers. I scale out some of my position and I says, as long as we could stay below 3955, my ideal target is 3919, 3907, depending on how we react to this trade. If my target could hit before the market opens, I'm going to be very, very happy. So at this point, I'm in less than half of my position. I lightened my load, and now the market is coming down right into our 3919 target perfectly. I get out some more of my position to continue to protect myself as we come into 3919 and start moving higher. I get out. In fact, I said I'm out some more at 3923. I have a very, very small position for the open. Now, the reason why I didn't get fully out and I'm kind of doing this scaling out method is because, one, like I said, I'm not very comfortable or I'm not very used to trading the overnight session. And usually the moves happen intraday. However, we got this push down. I was in with large size that I protected myself. Over half my contracts I sold on that first push down at 3933. Now I'm selling more into my 3919 target. And the reason why I left some contracts open for the market open was I was speculating that this chart was weak, and I was speculating and had a basically like a lotto or just a small size that if we keep selling off, I have at least a runner that I could capitalize on a further downside sell-off. So then in the plan today, scenario number one was I said that this 3919 and 3907 can provide a short-term relief bounce in the market as sellers have to cover. I'm not interested in getting long as everything is weak, and I still am in my short position. So if you've known me and you've watched my videos, I do not like selling short and automatically flipping to long. If I close out of my short position at a demand zone and that's my target, I'm not selling my short and buying it and then expecting the market to rally from there. I'm covering my position and waiting for more development as then that new setup could possibly form a new trade. But why I held this setup was if we can get below 3907, I was expecting a further sell-off. Then the market opened up. We bounced off of this zone. We put in a higher low, and then we began to rally. And then on this strong little volume candle up here, I stopped out of this position. But then we rally, and look where we rally into. Remember where I took the market short earlier over here, speculating that supply was going to form? Well, that drop to the downside did formulate supply. The market rallied into this green box, which is technically supply perfectly, put in a lower high, double top, and then rejected going into the end of day session. So the points I want to make in this video is have high conviction in your setups. I trust myself, I trust my analysis, I trust my edge. So when I see something I like, I put risk on the table and I follow my plan. That is the only thing I can do, and the only thing I have control of is myself. The second thing is if you trade futures, it will enable you to capitalize on moves which you cannot capitalize if you trade stocks or options. So in my opinion, futures are a favorable instrument for an experienced trader or for a beginner trader. I recently did futures videos. They are on my channel. I recommend watching them if you are new. The third thing is do not trade with emotions and do not have FOMO if you miss a move. Moves like this, when everybody else is sleeping and when the market's closed, they do not happen as frequently as you expect. So if you miss a move like this, although everybody was aware of it, do not have FOMO. And I said this in the Discord. I said there's going to be other opportunities. Do not have FOMO. What happens is people wake up maybe an hour before the market opens, which is totally fine, right? But they see the move happen. They see other people making money. They see me making money. They see, their friends making money, taking the setup that they planned out for themselves. And they wake up late, not realizing that, okay, I just missed that move. I have deep regret. I have FOMO. And they're figuring out now, okay, I want to make money. I see him making money. I see her making money. I want to make money too. I want to have real skin in the game, and I want to prove my analysis to be correct. And I also want to feel right and have my ego feel like the man. So now traders have frustration because of this, and they trade differently off of their emotions. When the market opens up, they try to make money. They force setups and they try to get a piece of the action. This is not the right way to trade, and if you think this way, you will never be successful. I never have FOMO. I'll be honest, I miss moves all the time. Ones I plan out for that work out perfectly. Sometimes I just don't take them because maybe I didn't see an entry, maybe I missed it, maybe I wasn't at my screens. But I know, because I have confidence in my edge and myself, that tomorrow there might be a better setup, or next week there's going to be a great setup. There will always be opportunities. The market will always be here. It's not going anywhere. You want to position yourself that you could be here when the market presents those opportunities so you can make money. If you think this way that I just explained, you're setting yourself up to not be here and to not have any money in your account if there is a high quality opportunity and a high quality setup. So I hope you all learned something from this recap. I hope you got value out of it. If you did, I would appreciate a thumbs up on this video. Comment if you have any questions, and definitely check out the links in the description below. I just added a full future section to the A to Z course, along with all other in-depth video lessons on how I trade, what I look for, psychology, market context. The link will be in the description below. After Black Friday, I will be raising the prices back up to original. The prices that you see on the website are the current discounted prices that have been that way for a little while now. But I'm going to end the video on that note. Peace out.